Welcome back, and joining us now is Amit Goel from Pace 360. Amit, hi. Interesting times and unprecedented numbers when you look at gold as charts at $3,200 an ounce. What is it that you would advise investors?
Thanks for having me on, Manisha. So the sense which I get is that the world is getting out of US dollar and US treasuries. They are looking for safe havens because obviously this is like a crisis time for the financial markets. And the only assets which used to serve as havens, dollar index and US treasuries, they are actually they are the asset classes where everybody wants to exit. So people are investing in gold because they think that's the safe haven. That's like the only safe haven in town now. So we are contrarians to the core, and my sense is that dollar index, which is close to 100 levels now, it was 110 in January. My sense is that I don't see dollar index going down significantly from here. It is
Okay.
probably looking for a bottom. US treasuries are probably looking for a bottom. And my sense is that everybody wants to buy gold, and there are hardly any sellers in gold, because of which the prices have moved up by 10% in just the last 48 hours. My sense is that gold does not have much way to go higher, at least in the near term to medium term. And I would rather bet on dollar index bottoming out, and I would rather bet on US treasuries bottoming out.
So, Amit, what is your sense now? If we do see some correction, and I'm calling it a correction from these levels, where do you see supports coming in? And would those be good buying opportunities yet again?
Absolutely, Manisha, because see, long term, the case for gold is still very, very strong. So, gold was range bound for almost 6, 7 years before it broke out in 2023-24. And my sense is that breakout is for real, but the extension of the breakout to 3,220 odd levels that it made today, I think that's pushing it a little too far. While it, of course, it can still make a higher high at 32, 30, 40, 50. It's very difficult to exactly say what's the top going to be. But my sense is that over the long term, gold still remains a very important asset class for the next 3 to 4 years. For the medium term, it is looking topish. So my correction levels over the next 6 to 10 months are probably going to be like a 2,600 level. There is a wider path for it to go down to 2,600. There is a much narrower path for it to go down to, let's say, 2,400, 2,500. But if it goes down to those levels, even if it is 2,600, it would be a very, very good buy because the long-term fundamentals of gold are intact, though it's a little overhyped and over-exaggerated story in the near term. And it doesn't work like this that, in the current global plumbing, the way the global plumbing of the markets happens, it's not that US dollar can go down the tube and rest anybody else can survive. There is no other currency in the world which can literally go up and still survive as an economy. So my sense is that there would come a point where people would not want to buy gold, and that would probably be good enough to give it a correction of 15 to 20% over the next 6 to 8 months. But at that level, it's going to be a phenomenal buy.
And when that buy does happen, then the next 3 to 4 years, how do you see that, Amit? Because we've got reports suggesting $4,500 and even $8,000 an ounce by 2028.
We've always given a target of $4,000 to $4,500 an ounce. That's like a low-hanging fruit for us if we look at 2028, 2029. And my sense is that while the path to 4,000, 4,500 is very, very wide, which means that the probability I can ascribe to it is more like 80% or even higher. But yes, there is a somewhat narrower path with a lower that it could skyrocket to $5,000, $6,000 an ounce. But my sense is that people, while of course we should be aware what it can go up to in the long term, but we should not allow ourselves to buy when there is like a frenzy to buy gold. But yeah, long term, the fundamentals are intact. And I would agree that 5,000 or even higher is something which is definitely probable. And 4,000 to 4,500, in my opinion, is, it's very, very high probability.
Achievable. A final question then, Amit, and this one is on the US Treasuries. I mean, and you follow them very, very closely as well. With the way we've seen, and it's a frenzy across asset classes. I mean, with what equity has been doing, 1,000 points up and down on days when gold has been moving $100 as well. From here on until the next 90 days, that is when there's a pause on various countries in sense of tariffs. What way would you want to trade?
So I'm actually bullish on long-term US Treasuries at this point. So the 20-year US Treasury bond is now trading at 4.95%, and the 10-year one is trading at about 4.45%. So what has happened is that the gap between the short-term treasuries and the long-term treasuries has gone up a lot because of loss of confidence in the US economy, and plus the fear that the Chinese central bank may offload their treasury holdings. I don't think they will go that far. And I think the treasury market is one of the biggest asset classes and the biggest market in the world. I don't think that just because one central bank, of course, they are a big one, they have $3 trillion of dollar holdings, but I don't think they can really break the backbone of treasuries. And I don't even know whether they would want to do it. They would at some point of time get back into business with US. It's still not game over for US and China to, again get along on some kind of a reconciliation mode. So my sense is that US long-term treasuries are a great buy. I think dollar index is kind of bottoming out, and I think it's probably topping out for the medium term.
Point taken. We've noted all of that down. Amit, thank you as always for joining in and making a sense of what the market really could be doing days ahead. And with that, that's all the time that we have on the show, but Business Lunch will take all the action forward.